Hello everyone, welcome to the Ichimoku.co and Forex Trading TV Daily FX Market Review for the trading day ending Tuesday, July 15th. Firstly to the Euro US dollar, and here we see a change of trend today with the current candle making a lower high and a lower low. Very large black body candle with the sellers taking control of this market, and we were looking for a breakout, and that's exactly what we've got. Yesterday we were watching the squeeze in the Bollinger Bands, and we have this low volatility in the market, which we know will lead to volatility perhaps manifesting itself as trending price action, and there is a possibility of that now. So we've seen the breakout down below the 1 standard deviation Bollinger Band. What we want to see now is continued development of that. We want to see another bearish candle with a lower high and a lower low. The only problem here for the sellers and for that scenario continuing is that we do have very strong support down here around this 135 level. In the recent past, there has been some very strong price rejection from this area on multiple occasions. But we do have this market bearish in all three time frames, and it's suggesting that there is a possibility of the market going on with this move. Now, 135.60 is important resistance for this market at the moment. That's where the market tested to for today's trading, and then the next sorry, I said resistance, at support, 135.60. The next area of strong support is down there at those lows around the 135.20 to 135 level. If the market can trade down through there in a bearish manner, we could see this market develop quite strongly to the downside. The only problem here for the sellers and with Ichimoku is the Chica span is within the corresponding price action, so it's failing to confirm the bearish activity that we're seeing in the market. It's suggesting that the market in those bigger picture terms doesn't have enough solid downside momentum to continue with this move down. So we will be watching this 135.60 level very, very closely. If the market does rally, potentially very strong resistance at 136, and we also have the Kijun-sen and Tenkan-sen trading around that area. Just one thing to watch here too is that we have a long-term time frame trend line coming into play at the moment, and I'll just zoom in on that. And here we saw the market interact with it today with some price rejection at the moment. This current candle as it's developing is just touching the line as well. So that may be an important occasion if the market can break through that trend line. Now, it won't suggest a change of trend, however, because that's all the trend line does. It represents a trend and the momentum of the trend. So a break of a trend line doesn't suggest a change of trend. Change of trend for us in Ichimoku is determined by our interaction with the Ichimoku indicators, and also based on the peaks and troughs. And in a higher time frame trend, we have still a series of higher peaks and higher troughs. What we will be looking for, however, is that this is suggesting that the trend through here, through this region, since the third quarter of 2012 is beginning to slow. So it could be quite important to this market, but what would be more important then is if we have the market taking out the support around the 135 level, and then we have an important level just over here that occurred in the first quarter of 2014, down just below that 135 level as well, about 135, so 134.75.